Hey, what is going on, guys? My name is Nick, and in today's video, we need to talk about two major stocks that just reported earnings, and some of them aren't that good. And those two stocks are Google and Microsoft, so two of the big dog tech companies that everyone follows. So without further ado, let's get straight into the video, and all I ask in return is just a like on this video. I would really appreciate that, and if you haven't already, please consider subscribing. That is all. All right, guys, now the first thing I want to show you here is Google stock. So as we can see, it was down 3% on the day, but they are trading down 6% after hours. And this would bring the share price down to about $2,240 after hours, which is definitely not a good sign that earnings went well. All right, now let's get straight into Google's earnings results for Q1 of 2022. So Sundar Pichai, the CEO of Google, said Q1 saw strong growth in search and cloud in particular, which are both helping people and businesses as the digital transformation continues. We'll keep investing in great products and services and creating opportunities for partners and local communities around the world. So honestly, there's not too much to gather from these comments, so let's get straight into the numbers. So here we can see revenues came in at $68 billion, up 23% year over year, and then in constant currency, this was up 26% year over year, so not that much of a slowdown from Q1 of 2021. However, the reason the stock is down after hours about 6% is because their diluted EPS is actually down year over year, and I believe that analysts did expect this drop, but not as much of a drop that Google posted here. So Google posted $24.62 of diluted EPS, but then if we go over to analyst estimates, basically they were projecting $25.91 expected, so that is a miss. Then as we can see on the revenue front as well, Google did miss by about $100 million, which really isn't that much, but it is still a miss nevertheless. As we can see, a big culprit was the YouTube advertising revenue, so this was at $6.87 billion when analysts were expecting $7.51 billion. Last quarter, YouTube revenue was below analyst expectations as well, so we have been seeing a bit of a slowdown in YouTube ad revenue growth. In terms of Google Cloud revenue, this one actually beat slightly, coming in at $5.82 billion versus $5.76 billion expected. And then their traffic acquisition costs, or TAC, came in a bit above expectations at nearly $12 billion versus $11.69 billion expected. So overall, guys, these numbers are very good. They still saw solid revenue growth of 23%, and for a company like Google, seeing 23% revenue growth, that's still very strong. But investors do care a lot about EPS with Google now because they are a very profitable company, and seeing that their EPS dropped year over year is not a good sign. So here we can kind of see a breakdown of where Google's revenue came from, and we can see that Google Search and Other was definitely the main growth driver for this business, where basically it grew from $31.9 billion to $39.6 billion in 2022. And then YouTube's ad revenue growth was the slowest out of these three categories here, so that is a little bit concerning considering that YouTube is Google's growth driver. But I think the main reason why Google was less profitable than it was last year in the same quarter was because of their other income. Here we can see in Q1 2021, their other income came in at $4.8 billion, whereas they actually lost $1.16 billion in this past quarter. Now, taking a look at Google's income statement here, what we can see is that their income from operations actually grew at about the same rate as revenue, so their cost of revenues, meaning their expenses, really didn't grow that much faster, and the main reason why they weren't as profitable as the same quarter in the last year was because of this other income being down so much. Now in Q1 of 2021, we can see Google had 682 million shares outstanding, whereas now they have 667.5 million outstanding. So they did repurchase shares throughout the year, but this still didn't offset the reduction in net income, and so therefore their EPS are still lower than the quarter in 2021. In fact, if we look at Google's statement of cash flows here, we can go down to their financing activities, and under repurchases of stock, we can see that they repurchased $13.3 billion worth of common stock within the quarter. And these repurchases were up slightly from the prior year quarter of $11.4 billion, but still not enough to offset that reduction in net income. All right, now let's take a look at Google's balance sheet after Q1 2022. Here we can see they have cash and cash equivalents of $20.9 billion, and then $113 billion of marketable securities, giving them total cash and cash equivalents of basically $134 billion. And interestingly, this is down slightly from last year's quarter where they had $139.6 billion in cash and cash equivalents, and then now it's at 134. And I would imagine this reduction is because of the share repurchases, but also because of the reduction in net income from the prior year quarter. But overall, guys, Google's balance sheet is still phenomenal because here we can see they have more cash than they do total liabilities on on the balance sheet, and then their long-term debt is only $14.8 billion, so this is a really good balance sheet. And I'm actually a bit surprised they didn't do more share repurchases in the quarter given how cheap the stock is getting, and because they didn't actually meet the net income that they did last year, so hopefully they're going to be doing a lot more in this upcoming year. And lucky for us, they did announce a brand new share repurchase program. So here they say on April 20th, 2022, the board of directors of Alphabet authorized the company to repurchase up to an additional $70 billion of its Class A and Class C shares. So in a nutshell, Google is going to be repurchasing a lot more shares than they normally do. And to prove this, we can take their $70 billion share repurchase program and divide that by 4 quarters in the year. That gives us $17.5 billion per quarter that Google could repurchase in shares. And keep in mind, in this past quarter, Google repurchased $13 billion in shares, so this would be a significant improvement. All right, so the last thing I want to do is calculate Google's valuation after this earnings report. So we can see here on Yahoo Finance that over the trailing 12 months, Google had EPS of $112.20 prior to this earnings report. So what I want to do is take $112.20 and then I'm going to subtract what Google reported last year in the first quarter, so $26.29. And then I'm going to add in what Google produced this quarter of $24.62, and that would give us $110.53 of EPS. So as we can see in after hours, Google stock is trading around $2,227 per share. So if I divide their new trailing 12 months of EPS by the stock price, we get a trailing PE ratio of 20.14 right now. So based on Google having revenue growth of 23% year over year, I still think this is quite cheap for Google, even though they didn't have EPS growth. And that's because once they get through this year of tough comps year over year, and then their other income starts rising again, I think Google stock is going to see a lot of EPS growth, and therefore their PE ratio will continue dropping, and this should look quite cheap. Especially considering the fact that Google is trading cheaper than Coca-Cola right now, where they have a PE ratio of 27. I would much rather own Google at a PE ratio of 20 than Coca-Cola at a PE ratio of 27. All right, now moving on to the second stock that reported earnings today, another massive tech company, that would be Microsoft. So as we can see, Microsoft stock was down 3.74% today, and then after hours, they are about flat, but down about 0.7%. And that would bring Microsoft's stock price to about $269 per share. So that is a relatively low level that they really haven't seen over the past 6 months. Over the past year, they did see it back in 2021. So with that being said, let's get straight into Microsoft's earnings. And by the way, Microsoft calls this Q3 of 2022 because their fiscal year is shifted forward about 6 months, but this is really just Q1 of 2022. So here they say Microsoft Cloud strength fuels third quarter results. Revenue was $49.4 billion in the quarter and increased 18% year over year. Operating income was $20.4 billion and increased 19% year over year. Then net income was $16.7 billion and increased 8% GAAP, up 13% non-GAAP year over year. So Microsoft's EPS growth is slower than their revenue growth, but it did increase year over year, unlike Google's EPS. So if we take a look at what analysts were expecting for this quarter, basically analysts were expecting $2.19 of EPS, and then Microsoft produced $2.22, which was a slight beat. Then Microsoft produced revenue of $49.36 billion, while $49.05 billion was expected by analysts, so they did beat on both the top and the bottom lines. But I should mention, they did only beat by a very, very small margin, so that's why the stock could be slightly down after hours, since Microsoft usually beats earnings by quite a large margin. Now, what I do want to show you about Microsoft earnings is this one table they always post in their earnings report, and basically this shows the growth of each of their different business segments. And if we look at the percentage change year over year column here, we can see that every single business segment grew at double-digit rates, except for their Xbox content and services. And I just want to highlight some of the really fast-growing business segments within Microsoft's business. So here we can see LinkedIn grew at 34% year over year, which is incredibly fast, and that is of course ad revenue and I believe subscriptions too. Dynamics 365 revenue grew at 35% year over year, which is solid. Their server products and cloud services grew at 29%, and then of course the big boy Azure and other cloud services grew at 46% year over year. And on a constant currency basis, Azure actually grew 49% year over year, so it's still growing at basically 50% year over year every single quarter moving forward. At least that's how it's been for the past few quarters. And because Azure is growing at such a faster pace than any of these other revenue segments, it is becoming a much larger portion of their overall revenues and therefore their profitability. And we can see just how important Azure is to Microsoft in terms of profitability, where we see Microsoft Cloud gross margin percentage, and that is sitting at 70% in this past quarter. So that is an incredibly high gross margin and leads to a lot of profitability for the business. So I love to see that Azure is still growing so quickly for Microsoft, and this should continue growing very quickly for many, many years to come. All right, so now what I want to do is calculate Microsoft's valuation based on their EPS update from this quarter. All right, so here we can see in the trailing 12 months, Microsoft produced diluted EPS of $9.39. So if we take Microsoft's $9.39 of EPS in the trailing 12 months and subtract what they produced last year, which was $1.95, here we can see that right here, and then we add back in their EPS for this recent quarter, that gives us $9.66 of EPS. And checking back on their stock price, we can see it's up nearly 1% after hours, so we'll use $272 per share. If we plug that in right here and divide that by the EPS, that gives Microsoft a trailing PE ratio of 28. Now, I still would say this is a little bit high for Microsoft, and comparing this to many of the other deals out in the stock market right now, I would not be buying Microsoft all hands on deck, but I do think it is a pretty good price, and Microsoft is one of those companies that continues growing for years and years on end and continues surprising investors, so there's nothing wrong with owning the stock. I just think it's a little bit pricey right now when you could be buying Google for a PE ratio of 20 or even Meta for a PE ratio of 13. And just looking at Microsoft stock's history, it's basically flawless. Like, this business has so much recurring revenue that it continues growing, and it's a very predictable business model, which makes it one of the favorite stocks for many investors out there, and I would definitely agree with that. And for that reason, Microsoft does command that higher valuation, so they shouldn't be compared side by side with Google. I do realize that, but yeah, Google stock is still looking very, very cheap right now. Anyways, guys, I really hope you enjoyed my video update on Google stock and Microsoft stock earnings today. Unfortunately, Google is down after hours, but I'm sure the company will continue doing very well long term. They basically have a monopoly in Google search, and that continues to be a very high growth driver for the business. And I may or may not continue to bolster my position in Google. We'll see how they do. And if the stock price keeps going down, then I'm probably going to be forced to continue buying Google stock. But anyways, thanks for watching, guys. If you did enjoy, please drop a like. It really does help me out. And if you haven't already, please consider subscribing so you don't miss any of my future earnings updates. And I will see you later this week.